All right, guys, let's talk about manufactured home financing. Now, I know the word financing alone is to make some of your eyes glaze over. You start hearing terms like FHA, conventional, chattel, land in lieu, and all of a sudden it feels like somebody handed you a bowl of alphabet soup and called it a loan program. So let's break it down for you in normal people language. One of the most common questions I get is, what's the difference between the FHA loan and a conventional loan? The simple answer is both can be good options. It just depends on your situation. FHA loans are usually a little more flexible when it comes to credit scores and down payment requirements. So if your credit isn't perfect, then an FHA may be an option worth looking at. Conventional loans, on the other hand, usually have a little stricter qualification requirements, but they can be a great fit for buyers with stronger credit. Now, here's where it gets interesting. One thing a lot of buyers don't realize is that some FHA lenders may require additional items to meet their guidelines. So depending on the lender and the property, that could mean things like concrete runners, decks at the exterior doors, improved driveways, or other side improvements. In other words, FHA may walk in and say, hey, we like the house, but we're going to need a few extra things before we're happy. And yes, those extra requirements can increase the overall project cost. But here's the part that people sometimes miss. FHA loans often come with lower interest rates, so even if you spend more upfront, your monthly payment could still end up being lower than another financing option. That's why you can't just look at one number. You have to look at the whole picture: upfront cost, interest rate, monthly payment, and lender requirements. Now, when it comes to manufactured homes, there's another big distinction people need to know, and that's chattel loans versus land home loans. A chattel loan is a loan on the home only. The home itself is the collateral. This is common if you're placing the home on leased land in a community, family land, or you're just not planning on including the land in the financing. A land and home loan is exactly what it sounds like, though. The home and the land are financed together in one loan. Since real estate is involved, land and home loans usually open the door to more financing options, including FHA and conventional programs. Now, here's something that surprises a lot of people. Many local banks and credit unions do not offer chattel loans at all. They may be willing to finance a manufactured home, don't get me wrong, but a lot of the time when they're going to want the land included as part of the loan. Basically, they're saying, we like the home, but we'd really like it better if there's some dirt attached to it. That brings us to another term you might hear: land in lieu. Land in lieu simply means you're using the equity in land you already own instead of bringing in a traditional cash down payment. So if you own land or you have strong equity in it, that means money already invested in it, that may be able to help satisfy some or even all of the lender's down payment requirements. In plain English, your land may be able to do some of the heavy lifting for you. The bottom line is this: every lender is different. They all have different guidelines, different rates, different requirements, and different ways of looking at the deal. That's why it's important to sit down with someone who can help you compare the total cost, not just the advertised rate, not just the down payment, and not just the monthly payment by itself. Because the cheapest looking option at first is not always going to be the best option once you factor in everything. So if you're not sure whether a chattel loan, land and home loan, FHA loan, conventional loan is right for you, I'd be happy to help walk you through the differences. No confusing bank talk, no alphabet soup, just a real conversation about which option fits your situation best.